and of course, where benefits from the desire for GPUs, it's got to be Nvidia, right? I mean, is that the #1 play for you? Have you been looking at, well, AMD, or indeed looking at the design element with ARM?
Yeah, so I think a lot of boats are going to rise over the next decade, and a lot of boats are rising now. So will it be a winner-take-all market? It's not going to be a winner-take-all market. There will be many different winners. Nvidia is going to be the winner-take-most, however, and we are really excited about what Nvidia is doing in terms of not only software development, but how they're changing the network in order to make data centers more efficient. So they're reaching out beyond just chips into the enterprise networking and software as well. So that sets up a really great moat for them and makes us very bullish on Nvidia.
Nvidia continues to dominate with its AI chips, with an 84% market share in a market projected to reach $867.7 billion in volume by 2030. But what's even better is that the company is doing way more than AI chips. Recently, Nvidia has entered a $1 billion investment round led by the Japanese tech giant, Softbank, in Wayve, a UK-based startup that wants to get its autonomous driving technology into cars in an attempt to compete with Tesla's FSD software. On top of that, analysts at Goldman Sachs have recently updated their Nvidia forecast, setting a very bullish price target that shows their confidence in Nvidia. So, in today's video, we will go over Nvidia's participation in the $1 billion investment in Wayve's autonomous driving technology and what is in it for Nvidia. Additionally, we will go over more positive Nvidia news and talk about why Goldman Sachs analysts are so bullish on the company. But before we do that, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Your excitement about AI sort of came into play with that discussion because you're worried that it's going to take a lot of investment and there's no savings. We got to build up the defense. There's wars everywhere. And you were early with Nvidia. You were early with AI. You pared back a little bit, but are not less bullish on the prospects for it, are you?
Well, first of all, I wasn't early with Nvidia. My young partner was early with Nvidia. He called me in the fall of 22 and said that he thought all this excitement about blockchain was going to be far outweighed by AI, and I asked him how to play it, and he told me I should buy this company, Nvidia. I didn't even know how to spell it. I bought it. Then a month later, ChatGPT happened. Even an old guy like me could figure out, okay, what that meant. So I increased the position substantially. I said in an interview in June of that year that I expected to own Nvidia for 2 or 3 years, that this was a mega trend like I'd never seen, potentially bigger than the internet. But when the stock went from 150 to 900, I'm not Warren Buffett. I don't own things for 10 or 20 years. I wish I was Warren Buffett. And 150 to 900, yes, we did cut that position and a lot of other positions in late March. I just need a break. We've had a hell of a run. A lot of what we recognized has become recognized by the marketplace now. We expected Powell to come back and repivot, which he subsequently did. But no, long term, we're as bullish on AI as we've ever been. You just wonder, if we were all sitting here in 1999 talking about the internet, or anybody was talking about it, I don't think anybody would have estimated it would be as big as it got in 20 years. We didn't have the iPhone, we didn't have Uber, we didn't have Facebook, yada, yada. And yet, if you bought the NASDAQ in 99, it went down 80% before that all came to fruition. That's not going to happen with AI. but it could rhyme. AI could rhyme with the internet. As we go through all this capital spending we need to do, the payoff, while it's incrementally coming in by the day, the big payoff might be 4 to 5 years from now. So AI might be a little overhyped now, but underhyped long term.
According to recent reports, Nvidia is joining a $1.05 billion funding round led by Softbank to invest in Wayve, joining another Magnificent Seven peer, Microsoft, who's already an investor in the company and also participating in the funding round. Wayve is a startup that's developing self-driving technology and hopes to use the funds to get its autonomous driving technology into cars in what is considered the UK's largest ever AI fundraise. This is considered a huge boost for the self-driving vehicles industry, which has suffered setbacks in recent years in its efforts to convince regulators that driverless cars are safe. On top of that, Softbank's managing partner and board member, Kentaro Matsui, called Wayve's technology transformative and said that it could eliminate 99% of traffic accidents. Now, I know you might be thinking that we are not ready yet for fully autonomous cars, and that would be a very valid concern. For instance, we've all heard of the infamous accident in San Francisco where a woman was dragged under a vehicle operated by Cruise, General Motors' self-driving unit. And this was an accident that led regulators to take away Cruise's permit and order it to recall all of its vehicles. However, to make sure it's ultimately safe for us, the CEO of Wayve, Alex Kendall, plans to begin with driver assist technology, which will still require someone's attention behind the wheel before targeting vehicles that can operate without any human involvement. On top of that, to make things even more interesting, Wayve's technology aims to learn driving rules and patterns on its own, rather than needing them to be programmed in, which would allow it to respond to unpredictable scenarios on the road more efficiently than the other self-driving systems in the market, like Alphabet's Waymo. Wayve wants car makers and other fleet operators to install its technology into their vehicles rather than own or operate the cars themselves, which could actually be an edge they have over industry leaders like Tesla, as their main goal becomes optimizing autonomous driving rather than worrying about the 100 different things a car maker needs to worry about. Additionally, Wayve has been conducting trials on British public roads since 2018 and has already partnered with delivery fleets from Asda and Ocado, which proves that their autonomous driving system is working efficiently. Now, why is Nvidia investing in this company? Let's find out. Hello everyone, and welcome back to Investocracy.
Time to spotlight AI and innovation and which stocks are really paving the way. You may have just seen Nvidia not long ago with the 700 number. Now it's 900, and everybody's talking 1100. Ryan Patel is with us, Global Business Executive, Board Director at Drucker School of Management, Claremont Graduate University. And you're going to tell us about this, but that's not necessarily the only one that's great. You have a lot to tell us. What's the big picture? Is the AI craze real? What's the future of AI?
Yeah, I think the AI craze is real. More importantly, we don't know what the valuation is, right? When you think about it, and you think about the semiconductors of Nvidia, of AMD, Intel, and others, they need processing power when it comes to AI. And these companies, when you think about hardware sector is now sexy again versus software, but where software has always been the leading.
Nvidia is already the AI chips market leader, and many analysts are expecting the company to maintain this position when its Blackwell chips come out in the second half of this year. So in the future, Wayve could leverage Nvidia's Blackwell platform to power training for their autonomous driving system, which in return would add huge value to both parties. For instance, Wayve would definitely be able to store more and more data using these chips, and that would help develop its autonomous driving system and increase its efficiency and ability to predict different everyday scenarios on the road. On the other hand, Nvidia would profit from providing these chips to Wayve, and this would result in other automotive companies taking notice and buying Nvidia chips to develop self-driving technologies and enhancing their AI products. There's a lot of potential for this partnership, as the British Transport Secretary, Mark Harper, said that self-driving cars could be on Britain's roads by 2026, and according to the government, the automated vehicle bill, which is designed to start a transport revolution by enabling the safe deployment of self-driving cars, is expected to become law in the coming weeks. This means that Nvidia's investment is going to print money in the future, as the government also expects the self-driving vehicles industry in the UK to be worth approximately $52.6 billion by 2035. Additionally, Wayve announced plans last month to open a research center in Vancouver, Canada, to accelerate its growth, and this will be Wayve's third location after London and Mountain View, California. This could mean that we will see Wayve's technology expanding to the United States and Canada soon after it is fully implemented in the UK, which allows more room for the company's growth and potentially to be a fierce competitor to Tesla's FSD. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Citi's Stuart Kaiser is getting ready for another key earnings period for AI. He's the firm's head of equity trading strategy. Stuart, great to see you. We were not joking, but we actually posed a question last night, or I posed a question to these guys. What is more important, rates and the direction of rates, or Nvidia's report on May 22nd? So what's your answer?
Well, markets are pricing them about the same, actually. If you look at S&P 500 earnings, the Nvidia earnings day is priced as big an event as CPI, the FOMC, or payrolls. So the market's kind of with you on this one. I think for equities, frankly, I think Nvidia might be a little more important at this point, just to kind of confirm the earnings trend we've seen. With rates, to me, it's about rate of change. I mean, if you put 10-year rate at 4.75 and it got pinned there, I think equities can do fine in that environment. If you had a big miss on Nvidia earnings, I think that kind of eats away that momentum trade, probably a little bit more risk for the markets there.
So it's interesting. I think it's rates, but that's what makes markets, as they say. But was that flush we just saw in Nvidia a couple weeks ago? I think it got down to 735, 740. I mean, it retraced the entire thing. Was that it, or is there? You still anticipate a lot of? I'm not playing stock market, but a lot of volatility in this single stock.
Look, it's priced for about a 10% move on earnings. I think to your point, and it kind of speaks to earnings season, early earnings season, you had that Taiwan Semi report, you had that ASML report, you had that Netflix report. All those stocks were down double digits. And that got our attention big time, going into TMT earnings. The view was, geez, if those stocks put up okay-ish numbers and are down double digits, what could the rest of this earnings season look like? Big tech delivered and sort of stabilized things. But I think it kind of puts into context how important Nvidia is for the market. It's being priced as a macro risk, not a single stock risk. And based on how those other stocks reacted to earnings, it's still incredibly important.
Investors know that Nvidia's GPUs are designed to accelerate deep learning training and inference across a wide range of applications. Therefore, it's no surprise that Nvidia recently entered into a new partnership with MIDA to build a $20 million supercomputer to speed the deployment of artificial intelligence capabilities across the U.S. federal government. MIDA, which is a federally funded, not-for-profit research organization, has been a supplier of surveillance, communications, and cybersecurity technologies to the Pentagon and U.S. intelligence agencies, supplying U.S. soldiers and spies with exotic technical products since the 1950s, says the project could improve everything from Medicare to taxes. The MIDA supercomputer will be based in Ashburn, Virginia, and should be up and running late this year. This collaboration between MIDA and Nvidia represents an important step in harnessing AI technology for federal government agencies and unlocks opportunities for Nvidia to work with other agencies in the near future. Additionally, it's another opportunity for Nvidia in the sovereign AI market, which is expected to grow massively as governments from all around the world seek to implement AI technologies in their daily operations. Thanks to these good news about Nvidia, analysts are getting more and more bullish on the stock by the day, and very recently, Goldman Sachs analysts decided to go all in on Nvidia stock. The analysts released a new note to investors yesterday, which said that they maintained their buy rating on Nvidia stock, and they also increased their 12-month price target from $1,000 to $1,100. The analysts also added that despite Nvidia's year-to-date outperformance, they see positive EPS revisions driving another leg up in the stock, especially with Nvidia trading at a 36% premium to their coverage universe versus its past 3-year median premium of 160%. Goldman Sachs analysts believe that AI remains Nvidia's key growth driver, expecting that data center results for the second quarter to be fueled by robust demand for AI-related computing and networking, as the positive momentum from the AI ecosystem and product launches like H200 and Spectrum X contribute to this outlook. And as a result, they predict sequential data center growth of 10%, 17%, and 5% for the second, third, and fourth quarters, respectively. It doesn't come off as a surprise that more analysts and institutional investors are betting on Nvidia thanks to the company's leading AI position. And while a few Wall Street analysts are saying that it's overhyped, we've seen Nvidia prove these people wrong more than once with its impressive products and even more impressive earnings. For now, Nvidia investors have to wait for Nvidia's upcoming earnings on May 22nd to see where the stock might move, and based on that, they could decide if it's time to take profits or keep holding the stock for future gains. What's certain is Nvidia's earnings are so important that they could cause a shift in the entire market, so we can't wait to see the report. But what do you think about Nvidia stock? And what are your expectations for Nvidia's future? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Nvidia is. If you would like to know more about the latest updates about companies like Nvidia, then go ahead and click on the next video on your screen. See you there.